Back at it here once again, guys and gals. Hope you're having a great day out there, but it's that time of day again, though, here, folks. Time to get back to work. It's Wednesday evening. It's April the 3rd, 2019. My name is Joseph, and this, of course, is your nightly newsletter. Remember, I help new traders find predictable, dependable, profitable trading opportunities using a simple 3-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is to identify the best of the best opportunities we see setting up for tomorrow. That's Thursday's trading session. And we're going to cover oil, S&P, Nasdaq, gold, and euro in tonight's video newsletter. But I'm going to start off tonight digging into oil because oil is setting up with a beautiful coiled up triangle pattern, which makes our job nice and easy for Thursday morning's trading session. We look at the oil chart here for tonight, 4,000 tick chart on the oil, and we can see here we've got lower highs, higher lows, and this market just coiled right up, right around that 62.50 area. Anytime I see a range-bound market, I know I want to buy low, sell high, and avoid those middles. But when I have myself inside of a triangle, I start to really pick apart those edges. Those edges of the triangle are always going to be the most important spots to look for. And of course, because the market's a range-bound market, I want to get it going up so I can sell it back down, go it down so I can buy it right back up. Buy those lows, sell those highs, and of course, avoid that middle. Now, there's a little bit of caveat to this because obviously we have that long-term bullish momentum here on the chart. And so buying low will be a little bit different than selling high. I'm going to break down the right patterns to sell high and buy low in just a moment here on the oil chart. Jumping into the S&P here tonight. Boy, quite the wild ride on that S&P. It's a range-bound market, as you can see here on the S&P. Got a nice big bull bias into it. And of course, the prior week ahead of this was nice and bullish. So the long-term trend is definitely bullish right now. And of course, being a range-bound market, I want to buy low. I want to sell high. And so as we come off of this low, I'm definitely looking for a buying opportunity. But the big elephant in the room right now is this guy right here. It's not difficult to miss, right? It's not difficult to see that guy. That strong move down. Anytime we see a strong move in one direction, what happens next? Well, we're going to talk about that tonight in this video newsletter because I'm expecting to see these sellers try to make that run lower. I've got a couple ideas for buying off of that low, right, for that rally back up. And then, of course, if we don't get it, I'll talk about how to trade those breakouts as we go higher. I'm going to dig into the S&P here in a lot more detail here in a few moments, so stay tuned on that. Nasdaq, same thing here on the Nasdaq. It's a range-bound market. I know it seems kind of crazy to call this a range-bound market. But you'll notice, though, right, overall, we're bullish. There's no doubt about that. We know that anytime we see a strong move in one direction, we're probably going to, well, I'll finish that sentence later on in the video tonight. But the most important thing, again, is that big move down, right? So I'm trying to get long here, trying to be a buyer as we go, but I can't deny the fact that there are some serious potential sellers here that may pick my pocket for a second leg lower. I'm going to talk about how to be a buyer off of that next attempt. I'm also talk about, right, what to look for if the market doesn't give us that pullback. I'm going to dig into the Nasdaq here in a few moments, so stay tuned on the Nasdaq as well. About the gold here, you can definitely tell there's something coming here on the horizon. Get some big news tomorrow morning, and it definitely looks like gold is all wrapped up here around that moving average. You can definitely see here right now, overall, we are bullish here on the gold, but boy, oh boy, it is just settling in right into that range here right now. So I want to be a buyer. I want to finish off this pendulum swing that we mentioned in last night's newsletter. But at the same time, though, I definitely don't want to buy. I don't want to buy high because it definitely appears every time we go higher, those sellers are waiting to sell it back down. This leads me to believe that it's not a good idea to buy high right now. It definitely appears there are lots of sellers waiting up here. Now, for you guys and gals that watch this video every evening, you know there's one pattern I look for when I have to be concerned about buying into resistance, right? That pattern, I'm looking for that pattern now down inside that battle zone. We'll go over a couple different scenarios to consider there to be a buyer on the gold tomorrow. And then, of course, over on the euro here tonight, boy, the euro, nice, big, strong breakout. Man, we talked about that one to trap back up. What a beautiful setup right early in the session for you bulls. So, of course, buyers, of course, taking their profit and going sideways here right on the chart. It's a bull market. It's into a trading range. I've got this range nailed down pretty well. Range, of course, tells me bull market. I want to buy below that trading range. I'm going to put a couple different patterns together down here because there's one big concern, obviously, and that is this falling resistance trend line. So I need to get something here that's going to make it easy for me to buy that deep pullback or to buy a pullback overall. I've got a couple specific patterns I'm looking for, a couple things I want to avoid here, right, if we do get shallow pullbacks on this. So make sure you stay tuned if you're trying to buy this euro. I'll also talk about, obviously, right, that big bear move down. I'll also talk about what I'm looking for here on that euro to reverse this trend and what we need to reverse this, right, to be a seller tomorrow on that euro as well. Now, of course, I got all these charts all queued up and ready to go here. We got the gold, the euro, Nasdaq, S&P, and crude oil, and we're going to break this whole plan down here in just a few moments. But before we jump into the plan and put the charts all together for Thursday's trading session, I want to remind you, make sure you join our mailing list so you never miss another nightly newsletter, right? Make sure you never miss a video. We publish all the time here on the blog at Sideways Markets, and to make it easy for you to make sure you never miss a great video or any topic we cover here on our blog, all I need is your name, your email address, hit that subscribe now button, and then don't forget when you subscribe to the newsletter, make sure you check your email inbox because I'm going to send you an invite with a verification link as well as a bunch of goodies right in your inbox so you can get the most out of our time together on this nightly newsletter. So don't delay, pause the video, make sure you join the mailing list. That way you'll get a nice email from me every evening when our nightly newsletter goes live. That way you never have to worry about missing another nightly newsletter. Now, I need one more thing from you though here. I need some help from you here this afternoon, and that is I need some feedback. I'm always trying to make sure this is a better video for you guys every evening, so I need your help, guys. Down in the comment section below the video tonight on our YouTube channel, right, give me some feedback. What do you love the most about this video? What's the one thing that you would never want me to remove from this newsletter video? And what do you dislike, right? What's the one thing you don't like about this nightly newsletter? Because I'd love to do some hard work the next few weeks to trim down this video, give you the more of the good stuff and less of the bad stuff or the stuff you don't like, right? So now's your chance to speak up and give me some feedback. Drop me a comment in the comment section below. I would love to hear, right, what your vision is for the perfect video newsletter. And while you're down there, don't forget, give me a thumbs up if you love the video, right? And don't forget, subscribe to that YouTube channel because we got a lot of great stuff coming out on YouTube every week on our YouTube channel. And I really appreciate you taking the time there to put your feedback in the comment section below. And of course, don't forget, guys, if you got any questions, any feedback, any comments, pick up the phone. Call me in the office. I'm always here in the office. I'm always here to answer the call, answer all your questions, whether it be brokers, charts, data, strategies, membership, free trials, whatever the questions might be, guys, you can find that toll-free phone number in the upper right-hand corner. I would love, love, love to answer all those questions for you. All right, let's jump right in. Great to have you back here once again. Let's jump into that news worksheet here for tomorrow. Tomorrow, of course, is Thursday, April the 4th. What do we have here on the schedule here for tomorrow? Well, of course, tomorrow, not a lot of news on the schedule in the U.S. session. We get the jobless claims report at 8:30 Eastern time. I don't think that's going to be much of a market-moving event. Tomorrow's a pretty wide open day when it comes to any scheduled news reports in the U.S. session. But let's back up for a moment because there is one big event before we start off tomorrow morning that you got to be aware of. We got the ECB meeting minutes coming out tomorrow morning. Remember, just like the FOMC meeting minutes are published a few weeks after the FOMC report, the ECB minutes are published a week after, right, the ECB announcement. So tomorrow morning, April the 4th, we're going to hear those ECB meeting minutes, which means markets like euro and gold gold, right, are probably going to be a little bit chippy, choppy, and sloppy tomorrow, so be on the lookout. I always know anytime Draghi speaks, anytime the ECB gets involved, the euro and gold are usually some of the most difficult markets to trade. And we'll talk obviously about the plan for tomorrow, but be aware, with those ECB meeting minutes coming out early tomorrow in Europe, right, I would expect euro and gold to be probably not going to be the easiest markets to trade. And you saw probably, right, over the last 24 hours how gold was really choppy, anticipating those ECB meeting minutes so people can see what their real goal for the monetary policy is, right, in the Eurozone. The bottom line is, mini minutes tomorrow morning, gold, euro, be careful. We will obviously be doing this together in our trade room at 8 o'clock Eastern time tomorrow morning. We'll have a front row seat for that jobless claims at 8:30. But really, there's not a lot on the calendar. You know, we talked about today on Wednesday, we talked about the U.S.-China trade talks. That lit a fire under the markets this morning. We saw how much that impacted us today. We'll probably see a little bit more of that tomorrow, but we may see markets get a little bit rangy tomorrow. We may see markets get balanced, start to go sideways, because don't forget, on Friday morning, we get the big non-farm payroll report, right? Usually Thursday isn't really that difficult ahead of that employment number, but we usually, you know, obviously we keep our eyes open and we'll see what we get here for tomorrow. So no major news, no real major news for the U.S. session, ECB minutes before we get started. I really don't know what to expect ahead of that employment situation on Friday. Usually Thursday's not that much of an impact, but if we do start seeing some range-bound markets tomorrow because of it, we do know why, right? Anticipating that non-farm number on Friday morning. All right, watch out that gold and that euro tomorrow, again, because we know we've got, right, some hurdles to overcome with those ECB meeting minutes. We're going to cover euro and the gold in just a few moments here, guys, but first, I want to start off tonight on the oil like we do every evening, because the oil is really setting up for, right, a very easy kind of layup scenario right now. And really for the first part, you know, it's most important thing, it's the range-bound market. It's a range-bound market, lower highs. We got higher lows. Markets are rolling back and forth, right, up and down. It's a balanced market. And so anytime the market goes up, we want to be selling it back down. Anytime the market goes down, I want to be buying it back up. Now, that's the basic principles of this trading range. However, if we take a quick step back in time here, I think it's pretty easy to see this market is definitely bullish in its overall momentum. Now, why is that so important? Why does it matter that a market is bullish? Well, because the odds of success for a buy pattern right now are going to be a lot higher than the odds of success for a sell pattern right now. So because we have that bullish momentum going into this trading range, I definitely want to be a buyer a little bit more, right, than I want to be a seller. However, we can kind of engineer this so that we can offset any, you know, lower probabilities with a certain entry patterns. So it's a bull market, right? Bull market into a trading range that tells me I want to buy down below the range. I'm going to get rid of these battle zone markers here for us right now. You guys get the deal on that. The most important thing when it comes to a triangle like this, as I mentioned in the introduction, is to really hit those edges, right? Really hit those edges. You know, if this is a typical, you know, your typical range bound market, I'd find a rectangle, and we'll take a look at that in a moment here on some of the charts tonight. But when it's a triangle like this, you really want to focus in on those edges, on those swings, because those are typically where the best trades are going to be. So you'll notice I've marked up the sell zone above, right, the buy zone below, because really I want to get out of this range and buy it back up. I want to get out of this range and sell it back down. So how do we do that? You know, how do I buy low? How do I sell high here? Well, again, let's clean up some of this mess here on the chart so I can get my hands dirty on this, and let's get to work here. First things first, assuming the market goes lower here for us, I want to be a buyer down right off of that low. Now, oftentimes what will happen is we'll see these really sharp moves outside the range, and those are always great for us as range traders, because if we can get that strong move down, now that'll bring the moving average over. And once we have that strong push lower, I can almost guarantee sellers are going to try to sell off that moving average. You'll see this happen a lot in range-bound markets. The market will look very convincing as it tries to break lower. You'll see sellers then try to sell off the next pullback. And of course, it's not a bear market, nor is it a trending market either. It's a range-bound market. And so we know the market's balanced when we're in a range. And so because of that, we know the odds of the market going right back up into that range are pretty darn good. So rather than trying to sell this breakdown, what I'd much rather do is let those sellers try to sell the pullback and then just look to buy right into their stops, right? I know where the stops are going to be, and I can buy now right into those stop losses for a nice easy rally going back up to retest the high. So that's my plan here if the market goes lower, right? I want to see them come down, try to sell off the moving average, then I'm buying into their failure. Now, once we get that long, right, once we get that buy going higher, that's usually pretty good for a nice, easy first one-to-one profit target. And we'll talk more about trade management in our membership classes here at School of Trade. But you should be able to get a quick first target and then wait for the pullback. The pullback is really where a lot of the biggest moves come from. We get that pullback and then up we go from there. See, what happens is a lot of people don't feel confident to buy that break higher, so instead they wait and they buy the dip after the fact. There's also usually a rising support trend line here, which kind of gives them some sort of security, right, protection against those sellers trying to sell it back down again. So the moral of the story is, if we can get the market below the range tonight or tomorrow morning, I'm looking for the sellers to sell that pullback so I can buy into their failure. Right? Buy into that failure, then buy the pullback from there, and we'll make that rally now going back up. Now, where's the target on these types of trades? The target is the opposite side, again, right? The edges of this triangle. So what if we end up back to those highs then? Then what do we do? Right? You know, for example, we talked about this last night. Anytime I see a strong move, right? Look for a strong move. We should see a move higher. So what would be some opportunities here right now to sell this market off the high, because it's very bullish, right? But what can we look for to be a seller? Well, I can look for the market to go up, and I can look for a slightly different type of entry pattern. We call this a nested failure pattern. We know the market's bullish. So for me to want to sell back down, I need to allow those sellers to kind of get it out of their system, right? That's kind of the way that I always think about it, is that if the market is overall bullish, if I want to be a seller up top here, I've got to let these buyers try to buy a couple times before I can start looking to sell this thing back down again. And that's exactly what I'm planning on doing. You know, remember, as the price goes lower, I just look for those sellers to fail and buy into their failure. I can be aggressive like that because it's a bull market. As we go higher, though, I've got to be a little bit more disciplined. I've got to let the buyers try once, but you know what? They're probably going to try again. And once they try again, now I can look for that nice trap up here. My favorite entry patterns. Let them try once, let them try twice, and then we're trying to sell back down into that trading range from there. I call these a nested entry pattern or a nested failure pattern. Now, I know what you're thinking right now, but Joe, wait a second. These guys, they're going to try to run this thing right back up to retest the high here. I don't want to sell up here. I want to be a buyer up here. How could I be a buyer on this? Great question. Let's say we see a real strong move up, right? Real strong move up. How could you buy this market? We need to see the sellers try twice now. Remember, it's a range-bound market. And so because it's a range, guess what? Yeah, you're going to see sellers try to sell these highs and bring it down, bring it back down in. Just like I want to let these buyers try a few times before I try to sell back down, I want to let these sellers try a couple times. Now, the key here is make sure those sellers try once, make sure they try twice. And my trick is always, because I don't want to buy into this overhead resistance, I look for a trap entry. And it's a very similar pattern to if I was trying to sell it, right? But I'll recap it in a second here for you. That now we wait for those bears to try once, let them try twice, and we're literally buying right into those stop losses, right, of those sellers. So a quick recap here, right? Buying off the low, bring it down, let those sellers try to sell it. I then buy into that failure and then wait to buy the pullback. To sell off the high, let's go up. Remember, it's a bull market. Let those buyers try once. Let them try twice. And again, trap. Sell it back down. Let them try once. Let them try twice, right? Let those buyers exhaust themselves, then we sell it back down. And then here's a tricky one, right? How do we buy this? Strong move up. Bears try once, higher high. Bears try twice. You got it. Trap low, because what's the best pattern to avoid buying into resistance? Traps. Let those bears try once, let them try twice, and we'll buy up from there. Great plan here. Last but not least, how does the market reverse? How does it break out? We need that 1, 2, 3 breakout. 1, 2, 3, right? Get that strong move down. Moving average comes over. Remember, I'm looking for that failure to buy back up, right? If they fail, but if they hold and we jump, now we've got ourselves a 1, 2, 3 reversal, a 1, 2, 3 breakout, a 1, 2, 3 breakout. Mark up that high, mark up those lows. Pay attention here now. Mark up that hidden channel, and we're selling off the top of that channel. Boy, lot covered in a very short period of time, right? We've talked about 1, 2, 3 breakouts, nested failures, trap patterns, failure patterns into pullback patterns. You want to learn more? In fact, I want to teach you as much as I can, but I can't do it here all on this video. So to make it good for you, right, I'm going to drop in a link up top here, upper right-hand corner. I'll also put a big red button down at the bottom of this worksheet here right now, on our blog right now, right? Follow that big red button, grab that link in the upper right-hand corner, and join our free trading course. Inside the free course, you'll learn all about what I call my 3-step trading strategy. You'll learn all of my 4 favorite entry patterns. Not to mention, you'll see hundreds of examples of real patterns we find every day in our trade room. So grab that video or grab that link in the upper right-hand corner, grab the free course, and I'll see you on the inside, right, of the membership section of the website. Let's keep going. How about some S&P here tonight? Over on the Emini S&P. So one of the most important things that I do every morning is I always ask myself, what type of market conditions are we dealing with? Is this a range-bound market? Is this a trending market? Right? This is a range-bound market. It's a bull market into a range. And you can easily see, once I find my range, I can take my range expansion down. That acted as support. Take my range expansion up. That acted as resistance. So we know this range is accurate, right? This range is definitely accurate because you'll notice, right? They're using the range expansions as support, using it as resistance, using it as support, right? Both 1 and 2 outside the range. So we know it's a range. We also know that this range has a bullish bias to it, right? It's definitely got a bull bias. I definitely want to be a buyer, right, on this range. And where do we like to buy? We like to buy below the low of the range, right? Find ourselves inside of a range-bound market. We want to buy the low, want to sell the high. Remember, range-bound markets are balanced markets. So when the market, right, when I have a range-bound market, price goes up, I want to sell it back down, right? Price goes down, I want to buy it back up. I want to stay away from that middle, buy those lows, and sell those highs. So we're below the range right now, and I want to be a buyer here. The problem I have, though, is like I mentioned in the introduction, the big elephant in the room. This guy, right? That big move down. We talked about this last night. Anytime I have a big move in one direction, a strong move in one direction, what do we usually see? We usually see a second leg, right? We usually get that second leg. So even though I do want to be a buyer, because I've got that big pendulum swing, the amount of the move below the range to the amount of the move above the range, right? Even though I've got that big pendulum swing as a big target for me, I still have to be weary about this. I don't want to buy high right now. If I buy right now, I'm not buying at support. In fact, I'm doing the opposite, right? I'm buying at resistance because in my eyes, I see this as being a spike in channel. And if you follow my nightly newsletter every evening, you know the base of this channel is usually where we see those big sells coming right back down again. So combining the overall range-bound day along with this spike in channel or this strong move down, I've got to be suspicious. I've got to be patient because I'm expecting to see these sellers try to make a run for it. Now, I might be wrong, right? This might just shoot right back higher here. So let's get ready for both of those scenarios. What if the market goes up? What if it goes down? And of course, what if we get stuck, right, going sideways? The big thing right now is I know I want to be a buyer. I really don't want to sell this market because of the overall bullishness we saw earlier in the week, and of course the bullishness going into this trading range. The problem is we've got this strong move down, and we're expecting to see those sellers really try to make an effort to put that price back down to retest that low around that 28.68 area. Now you'll notice one of my favorite patterns setting up right in front of us right now, and that is I have a bearish momentum, but I want to be a buyer. So as I go higher here, I want to let the sellers try once. I want to let them try twice. You got it, right? That nested 2-try failure with a trap low. That's the pattern I'm looking for right now, guys. I know we have an overall bullish market, but again, with that short-term bearishness, I have to expect these bears are going to try to make another run lower. I've already seen them now try to do it once. How many times will those bears try? Probably at least twice. And if I can get them right below that low, I can rope in the sellers. I can rope in the breakout sellers, right? The trap high sellers. If I can wait for those sellers to sell one more leg lower here and grab that trap, that will get me in nice and low, have a nice risk-reward ratio, right, for this move going back up to retest those highs. But what if we don't? Right? What if we don't get that pullback here? Or let's say this, what if we pull back even further? Right? What if this thing does this, right? What if we go up? Let me clean this up a little bit here for you so we get some room to draw here, right? What if we get the 1, we get the 2, and we run? Then what do we do? Right? I'm not going to buy that as a trap. No, that'll be too bearish at that point. Now we look for that same basic sequence, the failure pattern into the pullback pattern, going higher from there, right? The same basic pattern we talked about on oil, right? It's that same basic, right? Let the sellers try to run it lower. Let them try to sell off that moving average. And then again, we're buying right into those failures and then waiting to buy the pullback as we go back up into that trading range. The key is you don't want to trade in the middle, right? So I can get it here. I can get 1. I can get 2. Trap, right? Trap low. That'll be the most aggressive. If we get the run lower, though, now we know the bears really mean business. Let them try to sell it again off the moving average here, right? That gives me now that failure pattern. I can buy into the stops of those sellers, right? Bears try to sell it lower. They get stopped out on the rally higher. And then, of course, the pullback, right? And we go from there. So pretty simple. Just need to see what we get next. Now, what if the market goes higher here, right? What if we don't get that pullback? Couple things you want to think of here right now. One is going to be, do we go up and get stuck inside this range? Because if that's the case, it's not very difficult at all. If we go higher here, we're bullish, we go back inside the original range, not a big deal. We know where our levels of support are. Now all we need is that 2-try failure pattern. 1 try for the bears, 2 try for the bears, and then back up we go. Let them try once, let them try twice. Let those bears try to break below this range, and then we'll buy right into their failure. We call those 2-try failure patterns. But what if this market really runs? Then what do? We use the same basic idea here. If it really runs higher here, right, we then look for those 1, those 2s, and grab that trap. You'll be amazed at how well those trap patterns will work. And the big problem is you don't want to buy too high up here because you're buying right into, what ultimately is the objective for those buyers. So if we do see it jump higher, really it doesn't matter where it is. If it jumps higher here, sellers once, sellers twice. And again, to avoid buying into resistance, I like to look for those trap patterns because those trap patterns are always going to protect me, right, by getting at the very lowest of the low price. And when you get into the lowest price, right, you kind of get protection away from, well, in this case, the sellers, right? Because those sellers, they'll try to sell once, they'll try to sell twice. If I can wait for that trap and get in nice and low now, I know that those sellers are already in. So an easy way to protect yourself against losses is to make sure you're always buying at support. And if you can, try to incorporate a trap pattern because trap patterns, again, like I mentioned earlier, we go up 1 and 2, think about it. If I buy a trap down here, right? If I buy way down here, very few people are selling down there, right? The sellers are selling up here, right? The bears, they sell high. So that's why you don't want to buy high, because when you buy high, you're buying right into an area where more sellers are coming in. What that means is you can go through a lot of pain before it even pulls up and makes you some money. I like to avoid that pain personally, right? I'd rather be as pain-free as possible when it comes to trading. You trade breakouts, you'll deal with a lot of pain. You trade traps, right? It'll be literally pain-free trading. Now, I know, we don't get traps all the time, right? But keep your eyes on them when you're trying to go either against momentum or if you're worried about buying into a level of resistance like the top of a range. So again, quick recap here, right? It's that 1-2 trap low because, right, how do you protect yourself against losses? Buying as low as possible, buying with traps, always making sure you're buying at support, right? I could go one step further, mark up those highs, bring over here, right? And that creates a hidden channel, and that will give me a level of support too. So really make sure you're always buying at support. Look for those traps, right? Especially when you're trying to go against, right, that overall momentum. Okay, if we do run lower here, don't forget it's that failure, right? To try failure back up. And if we go up into that range, it's 1, it's 2, back down, right, back up in. We go up. Now, this is the one here, right? You don't want to buy high, so you want to protect yourself against those sellers, right? You look for a trap because that's going to be that little bit of open space, right? The bears aren't going to sell that low. By the time the bears realize it, right, you're already cashing your first paycheck and holding that runner, right? Now, what if I'm wrong? Okay, what if this market turns around and goes nuts to the downside, right? What happens then? How would we know the market's safe to sell? A 1, 2, 3 reversal. You got it. 1, 2, 3 reversal. Get it right off that moving average. Okay, got to be a 1, strong move against. 2, pull back to the moving average. 3, right, a jump off the moving average. Then what? Mark up that low, mark up that low. Watch closely. Mark up that high, right? Up off that high there. Find that hidden channel. That's the hidden channel we love, and we'll sell off of that high. Again, selling at resistance. Selling at resistance will do what? It'll protect you against those buyers. It'll give you that little window you need to get your first profit target, move that stop up to point of entry, and then take your rest on your runner. Let's keep going. S&P looks great here for tomorrow. Over on the Nasdaq, boy, the Nasdaq, one heck of a day today. Is it a range? Is it a trend? I think you'd probably have some folks that would obviously call this a trend, but I think the most important clue right now is that range, because you can see on the Nasdaq, we jump up, we go into the range. Obviously here at that 10 o'clock news this morning, it blasts up and then right back down. Just insanity, right, on that NASDAQ. We are definitely overall bullish right now. I mean, there's no doubt about it, right? There's no doubt about the fact that we're overall bullish right now. But again, much like on the S&P, there's the big elephant in the room with this big move down. That big move down, anytime we see a big move, like I mentioned last night on the newsletter, what's the first thing we look for? Look for any strong moves in one direction, because you're probably going to see a second leg, or at the very least, you're going to see those bears try at least twice before they give up on this thing, right? So, they're going to give it the old college try, the old heave-ho a couple times until they give up and the market rallies back higher here. Now, it was obviously a very volatile session today, so, who knows? It may run right back up without it, and I'll be planning for that as well. So let's talk about this. I know I have that bear move lower. I know I'm expecting to see sellers trying again, and this will be very similar here, what we talk about in the S&P. The bulls want to go back and retest that high, right? Make no mistake about it. The buyers want to get back up to retest that 76.15. It's those sellers that we got to worry about here right now. So on a little bit different on the NASDAQ here, we don't have any sells right now, right? We easily see on the S&P, we can easily see the bears already tried once, which means all I need is a second try now, and I can look for buying opportunities here going back up on the S&P. The NASDAQ, I don't have that yet. So now I get some patience, right? 1, 2, and again, because we're bearish here, because of that bearish move, I really want to let those bears try once, let them try twice, and again, protect myself against losses by buying at a support level, right? Buying at a support level. In fact, if I can get a trend off those highs, up off that low, that's another support level now that I can use there. So keep your eyes open on a hidden channel here. Keep your eyes open. At the very least, right, it's a 1, it's a 2, it's a trap, and we're buying off of that low. Or maybe it pulls back further, right? Maybe this thing goes up. Maybe it goes up. It really nosedives here. Then we look for that classic 2-try failure into pullback, into rally higher, right? Very, very common pattern. Very common pattern. We see this all the time. I want to be a buyer, right? I want to be a buyer. So what do? I respect the sellers, right? I let them try to sell it lower. I let them run into this rising support trend line coming up off the bottom, right? I want to buy at support. If I can get those sellers try to sell that pullback into that support area to lower the range, trend line coming up, I can protect myself by buying low. The sellers are going to put themselves in a very difficult position by selling low. So if I can see these sellers trying to sell low here, and I know we're at support, I know now I can buy right into their failure pretty confidently, right? Buy into their failure, then of course buy that pullback. Same basic idea here we talked about earlier, right, on that oil. All right, guys? So those are 2 patterns we're watching for. Well, 3 patterns, I guess, right? One would be the 1, 2, that nested 2-try failure, beautiful pattern. The other would be a down failure, right, into pullback. And then don't forget, and I know I'm drawing these up right now, right? But don't forget, I've got hundreds and hundreds of examples of those patterns inside that free trading course I mentioned earlier. So again, I'm just drawing them up right now, but you can see real examples of those in our free trading course. Again, it's a big button below the video tonight on the blog and that link in the upper right-hand corner. Now, what if we go higher here? If we go higher here, keep your eyes out for a range. Okay, there's always potential for a range. If we go sideways in a range, 1 try, 2 try, back up, let those bears try once, let them try twice, and then back up from there. Pretty easy strategy. The tricky part, of course, of that is when it goes sideways like that, right? So keep your eyes out for a sideways range. Double tops will be the first giveaway. If you see this price go up, pull back, and double top on this, well, that's your sign right there. That's your range. Anytime I see double tops in a bull market, I know look for a range. And then, of course, once we have that range, it's the failure pattern, right? Let those bears try to sell off that pullback, and we'll buy right into their failure. The other scenario, of course, knowing where the target is now for these buyers, the other scenario is we jump higher here. It's a 1, it's a 2, right? And again, I don't want to buy high up here. So what do? We look for trap patterns, right? Look for trap patterns. And if we're lucky, right? If we're lucky, we'll get one of these. 1, 2, draw the trend line up, right? Find that hidden channel, and then we get that whole combination. That's usually going to be almost a guaranteed winner. It's the same basic idea, right? It's up. I know where the objective is. I don't want to buy high, though. I know up top here you're going to see who? Sellers, right? Sellers want to sell high, not buyers. So let them try once, higher high, try twice. Yeah, now we get that little trap low that allows me now to protect myself against losses. It allows me to absorb the sellers, right? Let the sellers try to sell. Let them try to sell again. Right after those sellers are just about ready to take their first profit target and it fails, I'll be right there to buy right into those stops and finish off that move back up to reach that measured move. So very similar here on the Nasdaq and the S&P. Last but not least, right, how do we turn bearish here? Well, again, we pretty much are bearish in the short term. Overall, we're bullish, but short-term bear momentum, what do we need here? I want to see a 1, a 2, a 3. You got it. Find that new low, mark up that hidden channel, and we're selling off the high of that hidden channel. Where's my target on that? Easy target, right? Back to that big round number. That'll be a pretty easy target at that point if we get that bullish reversal. Or sorry, that bearish reversal, I would say. So now we're looking pretty good. We know what we're looking for if we pull back. We know the plan if it goes range bound again. And of course, we know if it shoots higher here. Let's keep going. How about some gold here? The yellow metal. Boy, you can definitely tell something's coming on the horizon right now, right? That gold is all coiled up in a ball right now. It looks lifeless. It looks choppy. It looks sloppy, right? I've got some higher lows, some lower highs, some flattening moving averages. It's pretty much a range-bound market. We talked about this last night, though, on the newsletter. Real quickly here, we've got this big trading range right now. If I zoom out a little bit further here, right, get this big range here on the chart. And so, of course, we're seeing these great pendulum swings. I've got this trading range, right? The market, of course, swings down, swings up, swings down, swings up, big swing down. And we're expecting now that big swing down to eventually swing back up, right, to the opposite side. So we've got this big incentive, right? This big target waiting up top here, top of the range at 1300, top of the swing at 1304. But, that 1305, 1306 area is really a very interesting area. And, of course, it makes a great target for those buyers. But we've got to find a way to get into this market first, because obviously we're not, right? Obviously we're not running higher right now. We're definitely sitting inside of a range. The biggest clue right now is this bullish momentum, right? Market is bullish going into today's trading session. And of course, if the bulls have control on this, the bears have to take it back. Think of momentum and think of who controls the market, almost like American football. When the ball fumbles, it doesn't automatically go to the other team. The other team has to pick it up and run with it. So imagine now, right? American basketball, American football, basketball, right? If I drop the ball, you've got to pick it up, right? It doesn't just automatically go to your possession. The other team, the other side of the market, has to pick up the ball. So the moral of the story is, if the buyers had momentum going higher here, it's a bull market until the sellers can actually take that ball and run with it. Now, what does it take for reversal? It takes a 1, 2, 3. And we don't have that right now. We have a 1, but we don't have a follow through. So it's pretty easy to tell the buyers definitely have the edge right now, but we're range bound, right? We're stuck right in the middle of the range here, double tops, double bottoms. So we talked about this earlier, and when it comes to a range bound market, I want to buy low, I want to sell high, but it's all about the directional bias that tells me which of these patterns are going to work best. I'd much rather be a buyer right now. So what are some options here as far as being a bull? Let's get rid of the battle zones, no trade zones. What would be some options here right now to be a buyer here? Well, first of all, I love to go down into this battle zone here. I've got my trading range. I'm marking up that range, finding those key levels of support. I'm marking up that range, finding key levels of resistance. If I can get the market now to break lower here, it's a relatively easy setup. Let those sellers try to sell it, right? Let those bears try to sell it. Once we see those bears try selling off the moving average. And again, I like to use the moving average because the moving average is usually the most common area where people will try to sell pullbacks or sell retracements in this example. It's a bull overall trend or a bull momentum overall. So anytime I see sellers try and fail below the low of a range, I look to buy into their failure. So what do? We wait to buy right into those stops. Now remember, you don't want to chase after it then, right? Don't chase after it. We don't want to buy high. We don't do a very good job of protecting ourselves against losses by buying high like that. So what do? We try to buy low. Moving average comes over. I like to use that high. So the same high we had earlier, I like to use that high again. That's a pretty common pullback area for that rally now going back up into that trading range. Now, another pattern you may want to keep an eye on, we'll talk a little bit more about this on the euro, is a two-legged pullback. Two-legged pullbacks are not as common, but they're also very, very reliable. I call these two-legged pullbacks because there's two legs to the pullback. Then we look for the price to go up and over, and you can imagine now that moving average coming over, right? It's kind of the same basic pattern. Two-legged pullback into the failure, into the pullback pattern. So again, couple scenarios here. One two-legged pullback, draw that trend line down, up and over and go. Buying that pullback up and over and go. Or it's just simply that straight move down, right? Momentum goes lower. Sellers try to sell off the moving average. We buy into their stops, up, back, and go from there, right? Up, back, and go from there. Pretty easy. All depends on what we get during the pullback. Don't forget, stay away from the middle. If we chop, we know ECB meeting minutes tomorrow morning, right? I pop about 7:30, 7:45 Eastern time. So be aware of that as we go into the opening bell tomorrow morning. In the U.S., be aware of that. It may still be going sideways. So if it stays in the side, if we stay stuck inside this range, stay out of the middle, buy low, sell high, right? Same thing, 1, 2, and then back up as we go, right? Or if we go higher here, right? What's the plan if we go higher here now? We're bullish, so we can be a little bit more aggressive on this, but we have to remember it's a range. So as we go higher here, you're thinking what? You're thinking sellers are trying to sell the high of that range. So we let them try once, we let them try twice. I've got resistance up here. I don't want to buy into resistance. So what's the best pattern to avoid buying high? You got it. Traps. Trap, right? A trap low. Let the bears try once. Let the bears try twice. Nice, easy trap pattern. And then, of course, will get me in there now with that trap going back up to retest the high. Those are a couple easy scenarios I'm watching here, right, on the gold here for tomorrow. Let's wrap things up here over on the euro. Right, so gold's looking pretty good. Looking for that gold to break down so we can buy it back up. Looking for it to break up, right, so we can trade that move going higher. Wrapping up tonight on the euro. Euro is a bull market here, right? Talked about this last night, right? Easy 1, 2, trap. You can see a great example of that pattern right there in front of you, right, on that euro. We talked about this last night. Now, as that market rallies higher, what happens? It quickly pulls back and goes into a range. This is a bull market into a trading range. With that bullishness into a range, I want to buy low. I want to sell high. I know momentum is more bullish than bearish. If I had to choose, I would choose to buy the low, right? So we'll look for those battle zones below that range low. I mark up, right? I mark up my trading range. The size of that range helps me produce my support levels below, my resistance levels above. Those are keys for finding entry patterns. And then, of course, I've also got that prior level there, right? That 12,850, 1, 2, 3 levels there. That's a great spot inside of that range expansion level, right, for us to be able to buy off of that low. It's a nice, easy setup here. I want to see it go lower here and buy back up. The problem I have, you'll notice, is this trend line coming down. Now, this is one of those trend lines that really could wreak some havoc here tomorrow because well, for example, think about 2 examples of this. We go up, we see a sharp pullback like that, we draw the trend line like this. We go up, we get a shallow pullback like that, right? And the trend line looks like this. See, two very different situations. I can easily know where your objective is. I can easily get back above the sharper trend line, and I can buy that. I have a very difficult time. Yeah, it's not going to be as easy to buy up here. Why? It's too high, right? That's the problem, right? We're too high up there. So that's why I say this trend line has potential to really wreak some havoc here, right? Because it's just so shallow. It's almost flat, right? I can buy nice and low down here, right? I can buy low on that first example. So the way that this trend line sets up is a big deal. The fact of the matter is, it's not. I mean, it could be better, right? It could be steeper there. But I have a funny feeling, though, you see a lot of folks drawing that trend line off of that high right now. And with that trend line coming down off that high, we've got to get a pretty specific pattern down here. I want to see, first of all, a nice deep pullback. That pullback now, I want to buy as it goes back up. The problem is that trend line. Now, remind me again, guys, what was the best pattern to avoid buying into resistance? You got it, a trap pattern, right? Trap pattern, 1 and 2. This will likely be your best bet for buying this market as it goes back in, because you're just probably not going to get a very easy failure on this, right? Because you're buying right into that trend line at that point. You know what I mean? You're buying right into it. Now, obviously, if we get lucky, maybe we see it go down, failure, back up. We might get lucky on this and get that pattern really early in the overnight while there's still plenty of room for the buyers to go back up. But the odds aren't very good of that. Usually what happens is you'll see the market kind of mosey its way lower here, and then you want to let those sellers try once, try twice, and just focus on those traps. Because the trap pattern, again, the trap pattern will protect against losses by getting you in at the very lowest price possible. Then it's all upside from there, right? What happens is when traders see these falling resistance trend lines there, right, they get spooked. And so they start looking for traps to avoid buying into that level of resistance. That's really going to be probably the best, most reliable way to buy this market. Now, that trend line also gives me reason to think we might see a reversal. Now, how do we trade a reversal? Or in this case, it'd be a breakout. What's a breakout look like? 1, 2, 3. You got it. 1, 2, 3. Now, if I can see this market pull back nice and strong, hit that moving average, and then jump off the moving average, well, now we know we've got a bear market again. So now we'll mark up those lows. I'll mark up the channel high. I'll mark up that high, and now that becomes my sweet spot right there, and I'm looking for that sell right up off of that, up off that high. Where's my target at that point? Target's pretty easy. It's back down to retest that low, which honestly, I wouldn't be surprised if we get that tomorrow, because it doesn't take a brilliant technician to look at this euro and think it's a very overall, right, bear market. This may be nothing more than just some profit taking here, right, from those bears. So again, just kind of recap here, if you want to buy this on the pullback, watch that trend line down. It's a nested 1, 2 with a trap pattern, because again, you're not going to want to buy into that trend line, and you're probably not going to have much space to do so. Or maybe we get that 1, 2, 3, that run, mark up that low, mark up that low, find the channel, and we're selling right on the move back down. Again, selling at resistance, protecting against losses, right, by selling into resistance. Now, what if we sit here, right? What if we get stopped, right, chopped up here? Tomorrow we get the ECB meeting minutes, right? Tomorrow morning around 8 o'clock Eastern time, we'll see those meeting minutes. With those meeting minutes, if we sit here going sideways, honestly, that might be the best thing for it, because if we just chop around here going sideways now, well, that will get rid of that trend line. So if that's the case, right, if we end up chopping around going sideways here for whatever reason tomorrow, doesn't matter to me. Now this becomes a whole lot easier. Now we can go one try, right? Get that moving average coming over, let those bears sell off of it. Now we've got a whole lot more open space there. We can take those failures into pullbacks and rally back up. What's a breakout look like? What's a breakout look like as we go higher here? What are two things to watch for? Here's two patterns I was watched for, and this is pretty much the same thing we talked about earlier, right, on the introduction. One would be a strong move up, a 1, a 2, a trap, and a go. The key here is it's going to be really strong, right? So real strong breakup, let the bears try once, let them try twice, right, and we're buying that, right? We're buying into that second try. Another pattern that happens quite often is a 1, 2, 3, which then sets up into a spike in channel. Buying the low of that channel. It's a very easy setup, just got to wait for it. That's the hard part. The overall pattern itself isn't very difficult. It's just it takes some discipline to let it go up and then pull back and go again. I know. Nobody likes to wait around, right? Nobody sits at the computer thinking, man, I'm glad I'm waiting forever for this trade, right? Nobody wants to sit there and do nothing, but we know that patience, as I mentioned almost every night on this newsletter, discipline, patience, focus, right? These are like muscles. If you don't use them, you lose them. This is one of the biggest reasons why I tell all my clients, keep your cell phones out of the trade room, right? Do whatever it takes to remove those little tiny distractions each day. Because, for example, if you're on a cell phone and your cell phone buzzes and beeps every time something new happens, right? New Facebook message, new email, new chat, new text message, whatever, right? What that does is that conditions our brain to always be looking for something. We need to quiet that noise. One of the things that makes trading so difficult right now is that we live in an environment where everything is go, 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 and it makes it so much more difficult when, as a trader, we can't go, 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 go. We can't push these markets around. We have to wait for them. And so it really becomes difficult, and especially for all you younger traders out there right now, Turn off the alerts on your cell phone, right? You need distraction free. And I'm not talking about just when you're trading. I'm talking about all day long. You might ask, well, why? Why do it all day long? Because again, patience and discipline and focus are like a muscle. You can't just wake up one morning and expect to be a focused person. You've got to condition yourself to be focused. And how do you be a focused person? By staying focused every day this week. So make it a goal, right? Turn off all the alerts, turn off all the bells and whistles, remove all the distractions, and really get into some deep focused environments. Not just when you're trading, right? If you want to make it easier to stay focused in your trading, do it every other time of the day. All right, guys, we'll talk more about tomorrow morning in our trade room. But one of the things we always talk about in our classroom sessions is that you can't just be focused for a couple hours a day. You've got to condition that focus muscle every day, 7 days a week, 24/7. So when you do open up your charts, you're already got those muscles, those discipline muscles already primed. So condition yourself for success. It requires focus. It requires patience. It requires discipline. You can't just turn that on and turn it off, right? Do those little changes in your life right now to make it easier to be focused, disciplined, right, and so on. So again, bull market into a range, want to buy that low. If we run higher, I've got a couple patterns watching for overhead. We even know we're looking for if the market turns around as well. Boy, great job today, guys. Another great day this morning in our trade room. And of course, we're coming right back here for another great session tomorrow as well. Got a Thursday session tomorrow morning, 8 o'clock Eastern time. We open up every morning, Monday through Friday, bright and early at 8 o'clock. So come out and join me tomorrow morning in our trade room. We're going to execute the entire strategy together. And of course, if you're not ready for membership, if you're not ready to join me tomorrow in the trade room, check out our free trial. I think we have the best free trial in the business. As part of that free trial, you get a free pass. Come join me in the trade room. You'll get that free course, learn all about the strategy. So join that free trial right to the left of me, right here on the blog, on the website tonight. And don't forget, keep in touch. I'm always here. I love your feedback. Drop me some comments in the comment section. What do you love? What do you hate? What would you never want to see cut out of this newsletter? I got to hear from you soon. I'm making some changes coming up here soon. Guys and gals, I want to thank you so much for being here. As always, my name is Joseph. Be well out there. Be nice to each other, right? Stay focused. Remember, it's like a muscle, right? Work it, use it, or lose it. And we'll see you guys next time. Adios, amigos. Bye-bye for now.